Good morning and welcome everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ. It's a brand new week and brand new stuff, Santo.
Yes, of course. And CJ, the first thing that we'll be looking at today, this morning, is HDFC Bank
It's
Q1
the talk
number.
of the town again.
Yes, of course. And I would say that there is a lot of negativity around the stock at this point in time, CJ. But that said, I think there are still plenty of positives in the stock at this point in time. But depends on whether you're approaching the stock as a trader or as a long-term.
Like what? What sort of positives are you seeing here?
Well, just look at the numbers for that matter. You know, you got strong growth in both deposits, you got advances. Net interest margin has been pretty stable, and while everyone is carping on the deterioration in asset quality, overall if you see both the decline in
Net
deterioration,
NPA,
yes,
yeah.
net and gross NPAs is few basis points. You're not talking about some very dramatic deterioration in asset quality there. Plus the cost of credit for HDFC Bank has also seen a slight decline.
Yeah.
But the most important point, CJ, I would like to make is that there's been no major earnings downgrade, and the price target by most analysts are still in the range of 1800 to 1900. Most
But
analysts.
if I'm not wrong, most of them are still bullish, but they have cut down their target
Very,
price, right?
very slightly.
At least 50% of them. And in fact, actually, if I'm not wrong, Ashika Institutional actually downgraded the stock to neutral, if I'm not wrong.
Well, I can tell you that Credit Suisse has actually marginally raised EPS
Credit
estimates
Suisse is very
for
optimistic.
FY23 and FY24. So this is, I think, CJ, if you look at this stock, merger is a big overhang at this point in time. That's the negative that's been dragging the stock. Also, if you're looking at it as a technical, from a technical viewpoint, the stock fell to 1342, soon after the merger news was announced. Then recently it fell to around 1282. It's struggling to hold above 1300. But, CJ, if the sector as a whole does well, maybe HDFC Bank will trail because there is this merger overhang. But there's no way that you're going to see any kind of major downside in the stock.
Well, Santo, actually, at this point of time, the argument should be whether we will see an upside from in the stock from the earnings. Because if you look at the past 1 month's performance, actually the stock has done a little better. It, as you mentioned, it fell to around 1280. It has now recovered around the 1300, 1350 mark, about 11% gains in the past 1 month in the run up to the earnings. Now, clearly, if you look at the earnings picture on a year-on-year basis, of course, there is no doubt that the earnings look quite good. If you look at fee income growth, you look at interest income growth, you look at overall deposit and loan growth, 20% loan growth as well. So clearly, on a year-on-year picture, the thing looks very solid. But sequentially, Santo, almost every parameter is suffering. You have net profit falling, you have net interest income weakening, you have asset quality weakening, as I mentioned. Slippages have also, become elevated a little bit, largely led by the agricultural portfolio. So clearly, there are signs there for the bears to be a little joyful going ahead. My only concern now, you mentioned that NIM has been steady. NIM we know is at almost probably at the lowest level that we have seen in many quarters.
But it's still higher than most banks.
It's still higher, but not as higher as some of its competitors like ICICI Bank,
I'm just reminded of a phrase in Hindi which says that even when a camel sits, it's probably still taller than a horse.
That is true. But let's just not compare camels and horses here. Let's just talk about the NIM. Now, why I feel that the NIM probably has not seen the worst yet. And if you look at the loan portfolio of HDFC Bank, Santo, the retail share has been declining and the wholesale book share has been increasing, right? Now, wholesale increasing is basically a sign that, of course, they are probably seeing a lot of demand for corporate loan, which is in a way good for the economy. But it's not good for margins because on wholesale loans, generally the margins will tend to be much lower than what you will get on retail loans. Now, this is one thing that I have noticed is a shift in strategy from HDFC Bank over the past 2 years, where they are focusing more on the wholesale book, not as much on the retail book. Whereas if you look at their rivals, ICICI Bank, SBI, Axis Bank, they are going gung-ho on retail instead of going gung-ho on corporate loans. Probably, it's a sign of the past given how much they were bitten by the corporate NPA cycle. So for me, at this point of time, I'm just not surprised that there is not enough for the bulls to be turbocharged about HDFC Bank, and that bears actually, seemed pretty happy with the, the earnings print. Apart from that, one thing that HDFC in the long term is losing out on, Santo, is the only metric that matters, and that is customer satisfaction. I mean, the things that you hear about HDFC Bank, I myself have experienced it, and because I am also a customer of HDFC Bank, by the way. But the things that you hear on social media about the bank is just that goes to show that probably customer satisfaction is something that is trailing behind somebody like ICICI Bank and even a PSU like SBI. I mean, people have rave reviews about, I mean, you can look at what Safir Anand, who's a famous, stock market investor and an intellectual property lawyer, had to say about HDFC Bank's customer service, which was also in response to a Vedanta Group, a top executive bashing the lender basically on LinkedIn. So clearly, I think there are certain things are going wrong for HDFC Bank, and it is no surprise that no one wanted a merger that they have gone through. Asset quality is weakening, and sequentially the growth is weak. So for me, this stock is definitely an avoid.
Well, I think when there are too many things going against the stock, probably that you should see it as some kind of a contrarian.
Trying to be a contrarian, are you? You would probably, I think, the Parag Parikh mutual funds CIO would probably agree with you, because he has been buying loads of HDFC Bank in the last 1 month. That said, let's now quickly take a look at what the trade setup is like. Well, it looks pretty good, a brand new week, and it looks like we are going to have a strong start on the last sheet this morning. If you look at the Nifty futures on the HGX, they're indicating almost a 100-point uptick on the back of the cues that we saw on Wall Street on Friday. Wall Street rallied like anybody's business on Friday. Basically, the reason was that fears of a 100 basis point hike probably has now abated. So you have seen a lot of short covering happening, because when the CPI inflation data came earlier last week, everybody started talking about, Fed will have to raise rates by 100 basis points. Of course, then the Fed members came out and they said, keep nothing doing. We are only focusing on probably a 75 basis point hike, and please don't create fear mongering. And I think that is what has resulted in a bit of relief rally, and that relief rally is going to come to our shores as well.
Well, I think it's become a standard game of sorts. First warn them of 100 basis points, warn them of a very steep hike in interest rates, and then deliver short of that. Well, automatically everyone sees that as. But the reaction, what happened the previous time, there was talk of 75 bips hike, and then eventually a 50 bips hike came
also
through.
Santo, it's a very weird fact that after the CPI inflation data, market tends to rally, and then before the Fed hike, the market tends to fall. So it's a weird game.
Well, that said, domestic liquidity appears to be quite strong at this point in time. Traders, although, are closely looking at technical levels, and you have the maximum number of call options that have been written at 16,000, which probably could act as a resistance level, and also a lot of put options being written at 15,500.
Yeah, and I don't think HDFC Bank's earnings are helping it.
Which probably could be then the support level. That said, let's quickly take a look at the stocks on our watch list this morning, starting with Bharat Electronics. CJ, what a superb set of numbers there, almost 90% increase in revenues year on year, and a stupendous jump in net profit as well.
Yeah.
The defense story is looking quite strong, and CJ, just look at how the stock has been faring in this volatile market. It's still quoting close to its record high, so that itself should give you an indication of how bullish the market is. Order book is close to about 55,000 crore at this point in time, which is almost 4 times annual earnings. So this stock appears to be on a very strong wicket, CJ.
Well, Santo, you have been advocating about BEL for almost a month or two now, so clearly hats off to you for that. But my concerns still remain the same. Execution is something that I'm a little concerned about, which the management have also pointed out in the past because of the chip shortages. Even though the order book looks quite healthy at 4 times sales, I just hope that the revenue visibility also comes in from it, because without that, probably these multiples at this point in time might not sustain. And largely, I am still, Santo, very skeptical as to how the defense capex will pan out this year, given the sort of measures that the government is trying to take to curb inflation, to provide some support to the consumers and consumers. It just seems likely that capex is going to be as high on the defense space as probably a lot of people in the market are expecting. That said, another stock where the earnings update was very strong, although earnings have not come out, they come out with their Q1 operational update, is SunTech Realty. The real estate sector is one of those sectors which has taken a beating this year, along with IT. But if you look at the performance in Q1, very, very strong numbers. Pre-sales growth of about 89% on a year-on-year growth, which basically shows that there is still healthy demand out there for real estate despite the interest rate hikes. Apart from that, the sales collections as well rose in the range of about 60 to 70% on a year-on-year basis, which again shows that the collection efficiency is also quite improving for SunTech. So clearly, the fundamentals look good, and on the technical metrics as well, Santo, the stock is looking like the bullish momentum is going to continue in the near term.
Well, if you look at the real estate sector as a whole, it's fallen close to about 25, 30 odd percentage so far this year, and in that SunTech probably has been an outperformer of sort. It's not fallen that badly; it's remained flattish. That said, the stock saw a big jump earlier this year, and since then it's been slowly drifting lower. As it again rose from about 400 to 500 odd levels, but for the last 3 weeks or so, again it's been consolidating in a very narrow band there. So that probably indicates that market is not very convinced about the story at this point in time.
I think probably now, of course, the Q1 earnings will be the next big trigger. I mean, right now everything is conjecture around the company after the rate hikes.
Yes,
but we'll have to see how the earnings.
That is true, but usually market tends to have an idea about the quarterly earnings. They tend to discount it, call it whatever, but the market already seems to price it in, and at this point market is not pricing in the earnings, is the feeling that I get looking at the stock. That said, next stock, InterGlobe Aviation.
Interesting name on
yes. CJ, look at the way the stock has been so resilient despite the steady stream of bad news. You had high oil prices, other incidences, which was bad PR for InterGlobe, and still you have the stock holding and in fact inching higher. Now the reduction in ATF prices, that cut, is definitely going to provide some kind of a temporary breather, but I would be more heartened by the fact that the sector in general has been upping its hiring. Hiring is happening in a big way. If you look at the reports over the weekend, that shows that there is strong demand in the sector at this point in time. So this is a sector that I'm bullish on, and I think probably InterGlobe could be in the news for some time to come.
Santo, clearly, I mean, the leadership that InterGlobe has in the aviation market is going to hold it steady, or probably provide a lot of protection from the incoming rivals that are coming. We know that Akasa Air is soon going to join them. Jet Airways is on its way back. So clearly, 2 new operators are going to emerge in the sector. So there will generally be a concern about new competition. Again, a pricing war happening, which has always been a problem for the aviation sector. Apart from that, of course, the cash position of the company is something that has been really good. But my only concern here would be the margins, and the yields going ahead. Clearly, with the oil prices remaining elevated at this point of time, even though we have seen a marginal cut in ATF prices, the ATF prices overall over the past 6 months have risen by quite a margin. So clearly, cost pressures are going to remain elevated. Don't forget that oil accounts for about 40% of the cost structure of the company. So clearly, this is something to watch out for. And apart from that, going ahead, fares have increased now almost 60%, Santo, on a 6 months basis. So whether in an inflationary environment like this, customers will be able to pay that much amount for shorter trips and short distance travel, I am not so sure. So that is something that demand side also something that looks a little worrying. That said, the next stock where there are no such worries on demand and on cost structure is Mirza International. Well, what a performance the stock has given over the past 6 months, 9 months to past 1 year. Now at this point of time, why Mirza International? Well, it is a reopening bet, right? With the schools reopening, colleges reopening, offices reopening, this is one bet in the footwear space that you get at probably at a cheaper multiple compared to some of the industry leaders like Bata or Relaxo out there. Now, what is helping Mirza International is basically the acceleration in the e-commerce growth that the company is seeing. It sells brands like Red Tape and all out in the market, and apart from that, a lot of domestic mutual funds are lapping up the stock. So clearly, a stock to watch out for.
My only concern, CJ, the stock has almost risen 4-fold since October, right? 9 months, 4 times. Strong earnings, good margins, everything. But I think in the short term, it could probably take a breather. Well, that the markets have opened 128 points up on the
as
Nifty.
indicated, more than 100
HDFC Bank under pressure, down slightly. The market not very happy with the earnings. So is HDFC. Yes, of course, CJ, you said so.
I was just feeling it thoda sa tight lag raha tha.
1700 stocks are up on the NSE and just 226 stocks down.
I think Santo HDFC not doing that bad. It's just down about 0.1%. So let's see. Maybe it might make a late recovery. That said, let's look at some of the top gainers on the Nifty, and they are Infosys, surprisingly 2.1% higher. Larsen & Toubro about 1.5% higher, and IndusInd Bank about 1.2% higher. So clearly a mixed bag as far as the gainers are concerned. But HDFC Bank at this point of time looking a little weak.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.